Going into obviously FOMC, that's going to be significant. Pretty much anytime you run into FOMC, but this time especially, I would say. Just based on the fact that, let's see, it's all set up. Yeah, just based on the fact that, you know, macroeconomics have kind of been driving the show. It's been the whole tariff talks, it's been all the inflation stuff, getting interest rates down, trying to, you know, smooth land the economy, but there's just been a lot of chaos. So typically announcements like that, if you can look back to, you know, the last significant sell-off we had on the daily, really, that was mostly, yeah, right here. This big down candle. This was an FOMC day. A lot changes after FOMC. It's like a reset. Same thing with CPI, NFP, but the previous charts mentioned have seemed less significant lately. So I believe FOMC is going to be an opportunity for things to get shaken up. Looking at the lower time frames where we're kind of operating right now, we swept prior day high, and we have this, you know, previous intra-week high over here. When we're sweeping the prior day high into the open, it doesn't necessarily give me the strongest indication that we're going to go higher. We also have rallied pretty much all night through London, so the London expansion gives me the understanding there might be a New York reversal. So there's a potential for just to kind of run some of these lows right here. Some of this. Yeah, right here. Essentially London lows. So the idea is, in my mind, if we're sweeping prior day high into the open, we're likely just to run for something down here. I don't know if we're going to get all the way down here, but that's a reasonable assumption. Would be specifically looking at this 830 opening price as well. Some data there. So that's kind of the context we're looking at. Is it reasonable to think we're going to break to the upside? I mean, we can potentially break this range to the upside. I would say it's more likely that that happens sometime this week than for us to continue lower. It would just be very, like, I don't know. I can't think of an instance where we see a substantial sell-off like this without any bounces. So yeah, the upside bet is more than likely going to be in play this week. However, when it comes to taking any trades right here, what I look for in developing a trading plan is typically going to be some sort of external level either being swept or broken with some sort of, you know, some sort of conviction. It needs to be pretty obvious to me. Are we? Yeah, we're not really in a trend. It's like, again, it's just a 60-minute range, 4-hour range. 4 hours pretty clear to me. We have this up here, this gap. That swing high. So eventually we'll have to get over this. I think long buy setup should be easier once we're over this area later in the week, maybe this 20,000. But yeah, as it stands right now, I'm going to just let today develop. Sometimes, yeah, you could get some bigger price movements, sure. To me, I don't ever view that as missing something because I need to be able to structure it in terms of risk, right? I don't care about what the upside is. It's a losing strategy to care about what you miss. I need to know about what I can risk, right? So we have ES making new highs. YM is absolutely ripping right now compared to NQ. So NQ is the weakest again. When you have something like that going on, you always have to be mindful of potential SMTs right here, especially if you're long in this area where, maybe you found a decent inversion entry. It's just not really the trade I want to take right now. I don't see a need to be super aggressive. But yeah, when you have the other two indices running these highs up here, and then NQ is not, and we're at prior day high, there is a potential for that to be kind of where it tops out. We've seen this trend over and over and over again, especially on stream. We'll see one of them just absolutely tear, and I'll give you the comparison just so you guys can know what I'm talking about. Yeah, this is YM. YM's, I guess, let's see. Yeah, YM's leading that breakout of this little pivot down here. Yeah, wild. Big move. Just directional. ES is above the high. And NQ is approaching it. NQ is just kind of rounding. I mean, I guess they're all kind of rounding. You're seeing the narrowing of the candles, right? The bodies are kind of getting smaller. It's not normally a great sign of strength. It doesn't mean that stuff has to immediately reverse, but it's never a great sign. You typically want to see strong candle closures. You don't want to see deep wicks. You don't want to see narrowing bodies. And here's your NQ. NQ's got these deeper wicks at prior day high. This can be it holding prior day high, of course. That's one perception. But again, you just have to be mindful that it could potentially not make a new high. Obviously, I can never predict the future, but I can use things that tend to repeat and then draw conclusions from that. That's pretty much all you do with this type of stuff. You just draw conclusions from what has worked in the past or what you've observed in the past, and you go from there. Now you're approaching that intra-week high, 788. So now you just want to watch how it works through this gap. So you had a 100-point directional move, which is nice. It's getting out of the range. However, never be fooled by when price moves really quick in one direction. It doesn't guarantee that it's going to continue to do so. I find, especially with the open, when there is an extremely strong directional move one way, without really any entries or structure, it almost always kind of digs back deeper on that, whether it runs the low. I mean, we saw that literally on Friday. This same exact thing happened on Friday where it ran really hard, and then at 10 a.m. it sold off and swept out this initial low right here. So never, ever, ever be like, oh, I need to chase this. If it makes you feel a certain way, isn't that like reason enough to understand that it's a trap or that it has the potential to be. If the market pushing really aggressive in one way makes you want to buy it up here, then why wouldn't it just do that so you buy up here so it could sell to you and then take it lower? There's always another way to look at this stuff. The game isn't just, oh, can I find an entry? The game is, how do I avoid making the same mistakes that most people will make? It's not everyone can win. There's a lot of people who don't make money trading, and it's because they get baited into bad trades. Simple as that. Whether it's their lack of education, lack of experience, or simply just their ability to act on emotion instead of logic. So it's always, you just gotta look at it from a couple different perspectives. One big candle means nothing to me. So when going over these setups, it's not that I don't like this particularly. It's just I don't like the area. So it doesn't really fit my model in that sense. I don't want to just take an entry because it's an entry. I don't find that works out very well in the long run because it's just, this can either be really choppy or it could just reject. I typically like to see, if we're trending for sure, I like to see some sort of definitive higher low. I don't like to just buy just this broad expansion because it could kind of chop and it could even dig into the gap again and then run. There's a million different things that it can do, but typically a lot of these big pushes, especially when there's, what did we really take out? If we really look at it, we just ran pretty much all night. We left this level intact. In my mind, there hasn't really been a significant sweep, so it's hard for me to justify that price is going to go higher. That's at least how I view it. Maybe a 15-minute sweep right here, that's somewhat significant, I suppose, but it's not my trade. Someone else could take it. It's just not mine. We'll watch what happens into 10 a.m. Either we get some sort of retracement or some sort of reversal profile. That's kind of what I'll be observing, but I do like the development so far. Obviously I'm never going to be mad about us getting out of a range. It's going to be a little bit easier to trade moving forward, but I'm very much concerned with just getting info today. There are many things I've done in the past that have always done me well. And typically avoiding a lot of setups that I'm not pretty sure about tends to work better over the next 100 trades. It's not just this trade. If you take an entry and it works one time, great for you, I guess. But that's not how I want to approach trading. I need to do stuff that's repeatable. That's something that's going to benefit me in the long run. And trying to chase every big move is just never going to work. Because you got to think, if you're entering, let's just say you enter right here, right? And then you look at this 15-minute candle. That's right here. So we're already up like 80 points at that point. And we have what, 1 minute? So are we just going to close immediately higher? Is this going to go up another 50 points in 1 minute? You got to be thinking about that. So we have in 1 minute and 30 seconds, this candle closes. And then there's the potential for it to wick lower and then run higher, or just even fold in and have an inside bar. So why would I expose myself to that? I would never want to enter at the end of a period of a big bar. It doesn't make sense to me. It's more than just a 1 minute entry that people need. They should be considering a wider spectrum of outcomes. Looking at different time frames. Realize that your entry is not relevant compared to what the higher time frame structure wants to do. It's quite literally just all about timing with this stuff, because I mean, all of it's based on candles closing. So if you find yourself consistently chasing bigger moves, you're going to be entering at the close of a lot of periods, and then you'll get folded over. And that doesn't mean it doesn't eventually go higher or lower. It just means that right there, this isn't really a tradable opportunity for me. Sure, maybe at the low, yeah, sure. I suppose maybe right off the open, buy the opening drive. But again, I don't need to be super aggressive. It's not my first time trading the open. I've done this for years. So it's like you can just wait. Typically, you get the same types of entries with greater probability if you wait a little bit. The open can wick so much. It's like there's no point unless there's like a really strong 15-minute candle, like a really long wick ahead of the open. Then yeah, go for it. But this right here is just a body. I don't know if this needs to dig lower and then run higher. I have no idea. And this is where you get into like the I guess the logic of it. So right now we have a big candle. So is the likelihood that we break this just in like 1 minute, is that going to be greater than it kind of holding as an inside bar and then potentially in the next candle dipping lower? Because now we're going to have this big imbalance. So whenever you get a big broad candle, it's very easy to want to get in super early, but the idea is the longer you let it consolidate, if possible, if you can just wait, the closer you get to this inside candle being closed. And then you could position for either, the reversal back into the range, or for it to kind of dip lower, then go higher. But to enter immediately right here at the, essentially the open of this 15-minute candle, that's going to be, there's 13 minutes left. So it could potentially consolidate for 13 minutes. You can save yourself a lot of time, go get some coffee and just wait. Because candles don't need to immediately go higher. There's a lot of instances where you'll see big broad candle, and then now you had three, this whole initial hour, 45 minutes right here, where it's just inside bars, and then it goes higher. So does it do the same type of thing, or is it just reverse here? If traders could do one thing, it's just be more patient. Be more patient, read price more than one time frame. It's not just the 1 minute chart that matters. So there you go. If you bought this entry right here and you risk that, it maybe went 1R, but again, that's just not my trade. This thing's going to more than likely invert. Maybe it holds and tightens right here, and then you find an entry, but more than likely it's just going to fold over. That's at least how I see it. It's like all of these lows did not sweep one another. You have one example. So there's multiple reasons why the long doesn't look amazing. You have, whenever you have a London expansion, which I'm looking at right now, it's not huge, but it's still it's almost 200 points. So for this range, it's kind of substantial. And when none of those lows are kind of swept, even down here, there's equal lows at the bottom. Like we'll pull it up right here so everyone could see. These are equal lows right here, right here. So all of this becomes an easy target. I'm not saying we have to hit it right now, but it's very vulnerable. That's the best way to put it. These lows are very vulnerable because if someone just bought here and they're just kind of in the trade, maybe they bought here, it's a pretty free ride. And price doesn't tend to move like pretty steady. It tends to kind of dig back on levels. I mean, I know everybody's place to stop, and it's just like it feels like the market runs right at it and then it goes. It's because the market will tend to just kind of test different points. There's nothing malicious about it other than the fact that the market's just looking to grab stuff really quick. People say, "Oh, that's not a liquidity grab." I'm like, you can watch it happen and then realize, "Oh, people got stopped out there. Now let me try it." So there's benefit to looking at stuff like that, but there you are with your inversion. Pretty textbook stuff. When I say a big expansion like this, we're potential to run on the opening price like we did on Friday. You know. The issue is that traders run into is they'll try to like buy something like this, like immediately on this candle, when they could just wait a little bit. And then if they want to buy it, maybe they wait for this to invert, right? And then they can find some structure. But even then, it's like, look at the 15. I'm not a fan of entering anything with the 15 looking like this. Your 5 minute, 5 minute actually doesn't look too bad. So that's your level. And you want to see how it reacts. This could actually form a model 2022 with, kind of this right here, because we did have a market structure shift. So that's the one thing you got to be careful of. Yes, I understand we rally up, pull back, but this is a shift right here. Like we can't deny the fact that we broke this swing low. So market structure has shifted intraday. I would say this gap right here is more significant than this little bullish gap, but it's not my trade. It's not a bad trade. I think this is decent, but yeah, YM's definitely holding up the best. So see, this is the example where I said, if you want to get in, you look for it to invert. Because now the 15's looking a lot different. So depending on how this 1 minute closes can really determine whether or not this is going to hold as resistance or not. Because if we can hold above that range high, and the range high is right here. So it's important to know these inflection points. Because if this closes above the range high, it's going to change what that potential short would look like because it's not failing into the range anymore. It would be validating. So this would, with 23 seconds, this is closing stronger. So now it's like you have a better trade. Sure, could you buy the prior day high test? Yeah, I suppose. And I'm sure there's no, it's not even VWAP. VWAP's not there. You could buy this, but you run the risk of it just immediately folding over on you. So entry price does not always equal expected outcome or expected value. Sure, this is a better price, but there's a lot less conviction that it's actually going to hold. Up here, it's a pretty safe bet now that we're kind of above here. As we get to the last 5 minutes of this 15-minute candle, you get the entry right here or whatever. Look for it to invert. Or look for it to run this external high. But yeah, it's good to be patient. I feel like this is solid. But I don't need to do it. This would be what? Let's see, 90. Yeah, you get about 50 points out of this. Watch it to hold, then watch it to run the high. Yeah, 5 minute looks good. Just take one contract. You have 40 seconds till the candle closure. Five minute, yeah, 5 minute looks good. It all looks good. ES is pushing highs, it seems, or at least really close to. Yeah, it'd be hard to imagine that the 5 minute undoes the 5 minute, because you have a gap under here. You have this tweezer essentially, a long tail prior day high. Running the external high shouldn't be that difficult to do. It should be able to run that session high. ES is pushing the high, so you have you have the potential for SMTs right here. That's the thing I don't like when I see the other two indices stronger than NQ. It really tells me I need to take NQ and not ES, or I'm sorry, I need to take ES and not NQ. Because ES swept the high, so this thing can easily just pull down right here. So now you expect it to, maybe it wicks me out, but that's pretty much it. I'm only using an eval today. I'm not trading any of my accounts. The whole idea, you put the trade on just for the sake of it hitting, right? Yeah, I don't feel like trading actual accounts. That might just have actually wicked me out, so. Oh well. There's really nothing you can do when it hits you like to the tick. It's been one of those markets this year. Nice. That's a solid trade. I like that. See, that trade makes more sense. That trade makes more sense than the initial long off the open, because you're trading out away from a level. So you're trading away from the sweep of the highs. You're trading away from it. So I like that stuff. Good exit too. That's a good area to target. That's exactly what you want to be thinking with when you have a run like that. You want to be targeting that internal gap. It's very common that it's going to bounce there. So yeah, you saw it stab lower, stab the stop. I'm pretty sure it like bottom ticked it too. And then you have so you form the wick, you hold this high, and now you have the potential for it to run. Give it like 2 more candles. So you got 2 minutes left on this 5 minute candle, and that will be the 10 a.m. Candle as well. That's going to start. It's choppy area. You would have hoped that this ran the high. So I kind of got joked by SMT, honestly, because you have this that ran, so it swept it out, and I wasn't too cognizant of that at the moment. I didn't realize that we were that close on ES. So if I saw that we were that close on ES to the high, like the way that we were, I probably wouldn't have touched anything. We would just left it alone. But we're talking $60. It's really nothing. $60 on an eval is like slippage. If I'm trying to pass an eval, I use like 20 micros, 30 micros. I'll do it in 2 trades. So if I'm using 1 micro, I'm not trying to do anything. And then in this volatility, like, what's this right here? Yeah, it's like you could be trading like 3 micros in this. It's not terrible. Let's look at this 15. So yeah, it really depends how the 15 is going to close. I feel like the 15 closes and you get the inside bar break. Yeah, we'll do that. That'll be the last trade. It's 2 little trades on an eval. I want this to initially just follow through, this inside bar to break and this wick to hold, because we're kind of holding above the range, that range high. So can it potentially wick down? Yeah, for sure. But let's just say $300 stop. Yeah, probably won't hold. Tricky. Because you just need to flip, essentially. That's really what you're looking at. Candle to flip right here, then just push the highs. Break that inside bar. It could easily break it to the downside, though. So that's why I'm not like, oh, this is such a high probability trade. It's like it could work. But I'm not confident enough to want to take it to make real money. Just use the eval. Just get the reps in, right? Give me data. Every trade you take either teaches you that it's a good trade or those are more of the trades that you want to avoid. So I don't have an issue pushing a button. It's all learning. Everything is learning. Everything in life is learning. You'd ideally wish this to kind of push higher immediately, though. Yeah, just leave it alone. Just took it off. Took it off before the stop, so it's like $200 on the day down. No need to really do anything else for me. It's just, it's not super high probability. Yeah, if you got the short, that's nice. That's a nice little knife drop. I like that. But when you start to get this action, this is when it's like you're going to really struggle. Because it's, oh, we went above the gap, and then now we're trading below the gap. It's like, make up your mind. I don't like when I see both sides of a fair value gap get colored over, because it shows me that there's ranging dynamics. And if we're in a range, there's not going to be a likelihood of continuation. So I'll try something small size, but just no point in pushing it, right? We have all of these draws on liquidity to the downside. The idea would have been for this to immediately kind of push this real quick, same way ES did. But it just appears that doesn't want to be the case. And I always see these where it just goes above and then the inversion fails. So it's just like, yeah, whatever. So yeah, back to the 15 minute. 15 minute tells me lower today. The lower time frame confirmation made me think we were going to potentially hold the highs. And yeah, I don't really like this. I don't like when we hold above a level and then fail it. This level should move. So the trade fits my model, but it's not like the strongest signal I've ever seen. When we're inside of 15 like that, not a fan. Because inside bars can kind of whip around as far as that candle that they're inside kind of allows. They can run to the high, run to the low, and if they don't break, it's not really crazy action. So like even this, it makes sense because it's inside the previous 2 candles. But yeah, the one thing you do, take a loss, whatever. You just don't continue to take losses in market conditions that don't really align with how you look at it. If I'm wrong, why would I keep pushing it? I tried one idea, like 6 contracts in total or something. It's really nothing. For like, I don't know, 10, 20 point stop. It's like, I like the idea of it going lower. This little bounce I was like, yeah, maybe we're just going to push the high. Maybe I was wrong. I thought my initial read was wrong when we went above the gap, But essentially, that's all this did was just kind of flip my bias. I was thinking lower. We're at this resistance level on the, we have right here. I was thinking lower. But when we bounce above these, I'm like, man, this looks like it could potentially just run this. And then even kind of chop and go lower. But no, I just kind of got baited. Oh well. So yeah, anyone have questions? Fire away. Monday is always defense. I'm never gonna really risk. It's sometimes I'll trade fundeds on Mondays, but I try to just do nothing. I don't think I traded last Monday, or if I did very little. It's always good to keep a backup. I mean, I don't really use like a practice account. I don't even know how you do that on TopStep or whatever. I just have an eval. I'll just have like one or two or whatever. Because if you're taking setups that are lower probability, just like based on what you know, it's not like a 90%, like you're pretty sure on it. If you're relatively unsure on a trade, take that loss in a different account. Take it in. I always tell people, I'm like, if you are not super certain about a trade, but you still want to try it, you could take it in an account that has like drawdown. If you have an account that's green, don't take your sketchier trade in the account that's getting closer to a payout. You can filter your losses to kind of go into a beater account. That's kind of what I'll do. If I'm not copy trading, I'll just kind of rotate the accounts, rotate them. Yeah, maybe now finally is going to run the low. We'll see. And a very not bullish structure though. So remember this part. This is what I said at the open. When you see this, don't automatically assume that this pullback is going to run for the high, right? Like you could buy here, and I guess that's what I should have done, but it's such an aggressive trade. This one really got me though. This one got me right here. I had my right idea down here. However, once we closed right here, I'm like, okay, I think maybe I was wrong. Nope, I was right. So I guess that's a lesson there too. But what I was saying is just when you get this big push, don't automatically assume you need to get involved. Like, yeah, maybe you catch a continuation, but the idea that this is going to need to go higher immediately is just wrong. If you have a big expansion, it's not going to need to keep expanding. It's going to need to pull back, need to go sideways. It's going to need to do one of them. I was thinking sideways. I was thinking maybe we'd get a little bit of a push. This gave me nothing. Gave me nothing at all. And that's what, we're just seeing is just sideways. We wicked below the low. So now maybe you'll get it. Maybe you'll get the candle flip, but yeah, messy. Let's see what the 5 minute looks like. 5 minute looks bullish, kinda. No, not really. Kind of looks weak. What's a daily look like? I just wonder, you're eventually going to get the inversion that holds, right? We'll try one last one. See if this one holds. But, don't go super aggressive on, your live accounts. Don't go super aggressive when you need to care about the outcome. But if you want to try some ideas, it's like, okay, cool, try some ideas. Do it on a practice or whatever. Yeah, it just keeps getting me with the same concept. I'm like, it's gonna flip, but then it just doesn't. So it's very trappy. And in this scenario, I'm getting trapped. So that is legitimately the last trade I'll take. I don't need to take anything else. Boom. Done for the practice account, and then tomorrow I'll be looking to take. I'll trade one account tomorrow. But yeah, I don't need to take another loss to know that I just can't read it today. Or I can't read at least the upside that I keep thinking I'm seeing. It's just not there. I will go over this though. There is a super important part of this. When you start to get onto the right side of the sell-off, we're starting to get here. Shorting becomes extremely dangerous. That's why it's like, yeah, I could see it, but you're eventually going to keep getting blown out. Like that will happen. So it's like we're really late into the short. So the idea that this has to keep rolling over is going to be tough. However, this action intraday there's a lot of back and forth. Like if we look at all of these individual gaps, you get this one that pushes up. This one gets ran through like 3 times. So it's like today there's hardly a significance with a fair value gap. This one, you get the strong closure, but like it's strong above on this period, and then it closes down here. Like that's a nasty trap. We're talking when I buy the candle, right? The candle I bought right here, it closed 42 points lower in 1 minute. That's a trap. I bought it and then it closed fucking 42 points lower than where I bought it. That doesn't even register in most people's heads. That's very trappy. So some markets will be easier to trade. Some will be kind of challenging, but I know where to risk real money. I don't want to risk anything today. Mess around with an eval, but like if you're getting worked up over an eval, it's like wrong business, So yeah, well, I'm gonna watch in to see just what side we end up breaking, right? So we'll end up going one way or the other. It's gonna either go here or here. I can understand the logic for this, but I've been trying for the upside. And if it finally goes, I'm just gonna kind of laugh because, I've been thinking it's gonna invert this. I try to invert it, or I try to get in, did not wait for a candle closure, then it folded. My bad. If this was a funded account, I'd wait for the closure. So unnecessary. Like the fact that I had to close all the way down here. Crazy. Then the next candle flip. So these are dangerous ranges, just to put it out there. It's dangerous out there. Stay safe for sure. I do believe it's gonna go for this. I don't see why not, right? I don't see why not, but I'm not going to take fucking 4 stabs at the same idea. Yeah. At some point you have to be like, dude, okay, I'm done. Like even if the market moves without you, who cares? You got to do it for your own sanity. There's no point in taking the same mistake over and over, taking the same loss. Sometimes the market's just not going to give it to you. It doesn't matter how well you know how to trade. It doesn't matter if you know how to read the charts. It doesn't matter how long you've been doing it. Sometimes it just ain't your day. And, that's just general advice. Not that I'm like, I don't really care. Either way, I'm just saying, and for you guys in general, sometimes you just won't get the trade, even if it works, and you can't really be too worked up about it. Maybe you put your stop in that spot where it gets hit by a tick. So what are you going to do? Automatically always leave your stop 20 points wider? No, you'll end up losing a lot more money. Sometimes it just doesn't work. Sometimes you just get stopped out. Let's just put it this way. If I get in this trade, right? And I'm like, oh, I don't want to be stopped out, so let me just have my stop down here. Maybe it works this time, but what happens the other 30 times that it runs for the stop? I'm going to always take a bigger loss because of that one time I got stopped out at the low? Fuck all that. Nonsense. Just let it work. This thing's going to keep coloring over both sides of fair value gaps, it seems. So we'll just let it do its thing. You just kind of watch it. What did we do today? We got data. What did I get from taking some eval trades? I got evidence to further validate that this is why I don't like trading these days. I don't like trading Mondays because, especially on high impact weeks like this with FOMC, because the structure is going to largely change by the end of it. So how can I demonstrate that it's going to be low probability? Try some setups that look decent on the lower time frame. look decent. What does that condition you to get when you get stopped out, when you see a good setup on a certain day based on a certain context? It teaches you that this isn't a great day to trade. So it's not that you don't have to. People get it wrong. They're like, oh, don't trade this day. And then they don't look at it at all. And they're just like, they wonder why they're compelled to trade these days with like max leverage at some point and push it with their funded accounts at some point. The reason you know it's low probability is because you've traded it plenty. And you're like, yeah, this isn't too great of a day. If this day was really great, you wouldn't go over both sides of fair value gaps. Just short and sweet. You wouldn't be coloring over both sides. Because if it's doing that, I'm getting stopped out because that's typically where my entries are based. So I know that to be, essentially, I know that to be a fact where if it colors over both sides, it's going to be a lower probability day for me because I'm getting stopped out. And the trade might still, work in either scenario. So yeah, you just don't want to mess around too much with this. These are days that piss people off because they'll get back in, and then they just keep increasing size. Just take a couple losses, whatever. Call it a day. There's nothing really too much to do about it. Yeah, this is a decent 15-minute close now. That's decent, right? You wicked under the previous candle low, and then now you close near the opening price of it. So you'd want to see it hold some sort of wick in maybe these bodies, right? And then run for the high, ideally. But again, I'm done. I tried some eval trades, simple. Come back tomorrow, hit on the funded. Wait really until after FOMC though, to like FOMC afternoon to start looking for any sort of copy trading or anything like that. Right now it's just putt around. I probably should I need to set up one of those like practice accounts on Top Step for days like this. I don't even know how you do that though. I see people that have it. I'm like, I don't know. It's crazy. So many people want to trade, but so many people are like, they act like losses are the end of the world. But losses are going to legitimately be like half of your trading when you first start, or 70% or 80% when you start. So it's like, if you just be okay with losing, you're fine. I don't care if I lose. You think I care about anyone's opinion if I take a loss on a day where I'm like, hey, this isn't a good day? No, I don't give a fuck. It makes no difference. And I hope most people can start to realize that you losing a trade does not matter. Like, there's way worse things in life than losing a trade. Losing a trade is normal. It's a normal thing. What's not normal is, resetting accounts. Like, that's not normal at all. That's bad. That's bad stuff. But if you could take a loss, whatever, you try one idea and you guys see it. It's not that the structure is necessarily the craziest thing you've ever seen. There's logic behind it. It just ain't working today. But there's some stream. I saw a video, some guy took 10 losses in a row. And he posted on his channel like he was streaming it. 10 losses in a row. Loss. I'm like, bro, stop. Like, how are you going to take 10 in a row in an hour? Made no sense to me. I took essentially, this is, I'd say, one loss right here, 2 losses. Because I tried this one twice, but I felt like I got ticked out. So it was the same entry. It was twice. This dude was like, it was like, short it. And then short it. It was just 10 times. I counted it. I scrolled through it and I just saw it stop. Bad. You don't need to do that. Promise you. Taking the 10th trade in a row will never make back the rest of them. If you could take 2 losses, whatever, 3, whatever, you'll make it back with a win. It's really not that, it's not that severe. ES. Yeah, ES is near the highs. ES is the stronger one right now, for sure. But now you're holding this daily level for now. If the candle can flip, you can probably get on the next candle for the highs. So once again, you get above the gap, below the gap, above the gap, below the gap. So If you want to go on your charts and screenshot something like this, that's how you know. You'd be like, hey, these types of days before high impact news tend to be low probability, and these are some of the signatures that make me think that. I would say number one, the fact that we are going over both sides of levels is typically a sign that this is some sort of consolidation, or that it's just sweeping people out of the trades. I've taken the trade I took today. It's not a trade I've never taken. It's a trade that it seems to be very reasonable. But the fact that it needs to come down one more time and sweep out that low and then run, and then now it's like just digging back and forth. Yeah, it tells me everything I need to know. So if you don't take the loss here or the loss here or whatever, you can see that setup, you can just watch it and see that setup you wanted to take would fail. And it just trains you to see, okay, these are days that I know I need to either use a little leverage, use an eval account, or just avoid, because the setups will not have the follow through you need. And they won't typically have them in the time duration that you're looking for. It might take longer. It might sweep on you a couple times. So it's like, I just don't see a point in getting real aggressive on these days. Yeah, you have 5 minute just barcoding. It's the levels are there. I won't deny that you do have that weekly high right there, or the intra-week high. So it is reasonable that it does hold. However, the way that it is delivering price is just not optimal for my type of trading. So it's a clear read for me at that point. When I see it do it a couple times, good. Maybe it cleans up in the afternoon. I don't even care. I got other shit to do. But yeah, whole goal here is just to kind of show you guys, like, this is my thought process. Everything I pretty much say, I'm just thinking out loud. That's how I trade. That's my thought process. Those are the levels I'm looking at. Those are the things in price I'm looking at. And I also just try to make it very not personal. If you get stopped out, who cares? You're fine. Nothing changes. I hear too many traders, like, they really will take months of back steps in one day. In one day, because they can't take a loss. All you have to do is set your risk settings. If you're on a funded account, you set a daily stop. I tell everybody that. Set your daily stop. It hits. That's why you don't see a daily stop. I lock out the account because it's an eval. If it's a funded account, I get stopped $200-300. Simple as that. You don't ever need to lose more than that on a day, unless you're trying to make $700, $800, $900. There's no reason to lose $300, $400, $500, $600, $700. If you're losing $700 on a 50K account, like, you might as well just trade your own cash. You should, because you're gonna blow it in 2 days. You're paying $200 to do it. Might as well just put $200 in $300 in a futures account over on AMP or Tradeaway or something. $100%. So yeah, how's everything? How's the stream? Everyone, quality good? Audio, anything? Any questions? Fire away. We're going to hop off in a bit. I'm going to save most of my energy. We're going to be streaming through FOMC. FOMC is really what we want to be focusing on. So definitely the morning of, we'll go over some things to avoid. Thanks, man. Yeah, I've been trying to, dude, I spent so much time getting all this shit locked in. So even just getting the server where I could have everyone on here, just headache. It's a bunch of permissions and shit. All the things you got to set up. So easy day. Easy day. I mean, very easy when you're not taking losses on a funded account when you know you shouldn't. Just take an eval loss. It's nothing. I mean, at least from my perspective, of course. It's just at this point. That's at least how I see it. And why do I know to do that? I'm not going to be like, oh, I'll rarely be like, yeah, we need to trade evals today. Dude, I'm not going to touch a funded account today. There's no point. There's no point. Yeah, thanks for stopping by, man. Yeah, we'll talk soon. Take care, everybody. Yeah, you know where to find me. We'll chat later. Peace out, everybody. Later, homie.